Hello everyone, I am Pradeep. Today I am going to deal with some basic concepts of first PUC accountancy. It will really help you. Keep watching till the end.
First, we will be discussing about the meaning of accounting in simple words. Accounting means it is the process of identifying, measuring, and communicating the economic information. It means in accounting, first we have to identify the transaction, then we have to measure it, and the information what we get from the measuring, no, we have to communicate that information, that is, what is the condition of the business, is it in a profit or a loss, and how to take over the business activities in the future days, and to make them necessary decisions which contribute to the growth of the organization. Definition of accounting. According to American Institute of Certified Public Accounts, accounting is defined as the art of recording, classifying, and summarizing the term of money transactions in a significant manner and interpreting the results thereof. There are two users of this accounting information: external users and internal users. Examples for external users are investors, creditors, consumers. And the examples for the internal users are management, owners, employees, legal advisors, etc. Now we will move to the meaning of economic activity. In simple words, economic activity means any activities involving money or the exchange of products or services are economic activities. In other words, an economic event is also known as an economic activity. It is the happening of a business related process which consists of transactions, can be measurable in terms of money. And the next one is bookkeeping. It means the process of accurately recording day to day financial transactions in a consistent way in the books of accounts. For example, purchase, sales, receipts, etc. Meaning of accountancy. Accountancy is the principle which explains terms and conditions, rules and regulations of maintaining an accounting activity in the business. It helps in maintaining the uniformity in all accounts. Let us move to the types of accounting. The first one is financial accounting, project accounting, managerial accounting, government accounting, tax accounting, and cost accounting. Financial accounting. Financial accounting is a measurement, processing, and communication of financial information about the business or organization to the owner, investors, creditor, and all related parties. Let's move to the objectives of accounting. First objective is to maintain records systematically and to know the profits or losses of the business, which is very important for the growth of the business, and to prepare the financial statements and to make the necessary decisions by considering the previous year financial statements. Now we will be discussing about the basic terms of accounting. Entity. Entity means an economic unit that performs activities. For example, Infosys, Tesla, SolarCity, Hyperloop, PayPal, SpaceX, etc. In other words, entity means a person or a thing that has a definite individual existence or separate identity. In accounting system, owner is treated as an outsider to the business. Capital. It refers to the money or a money's worth invested by the owner into the business. And the next one is transaction. It means movement of money or money's worth between two different entities. There are mainly two types of transactions, that are cash transaction and credit transaction. Cash transaction, where the cash is paid or received immediately. Credit transaction, where the cash is paid or received in the future days. Assets. In simple words, assets are the properties of resources which are owned by the business entity. For example, in hotel, chairs and tables are used to give the comfortness to customers. Examples for the asset are land, building, machinery, cash, stock, etc. And there are two types of assets: fixed assets and current assets. In fixed assets, there are two types: tangible fixed assets and intangible fixed assets. Tangible fixed assets are the assets which we can see, touch, feel, or which has physical existence. For example, table, fan, car, aeroplane, etc. Intangible assets are the assets which we can't touch, feel, see, that are goodwill, patents, copyright, etc. Current assets. These are the assets whose benefit will be exhausted within a year. For example, stock, cash, debtors, etc. Next one is liabilities. Liabilities are the debts owed by the business entity to the outsiders, or there are the obligations or the claims of outsiders against the business. The reason is business has received some benefit in the past without making quick payments. Such a payments or loans are called as the liabilities of the business. Next, we will move to the drawings. Drawings means the amount of a money or a money's worth withdrawn by the owner from the business for his personal use. For example, owner may withdraw cash from the business to take her girlfriend to movie and dinner. It may any personal reason, guys. Don't laugh at this. If I was a owner means I did the same thing. Let's move on. Debtors. Debtor is a person who owes any amount of money to the business. In simple words, any person who receives some benefit from the business without making quick payments, he will become our debtors. Creditor. Creditor means a person to whom business owes any amount of money because he sold the goods to the business on credit basis. Simple. Next, we will move to the purchases. The term purchases means goods purchased by the business for the purpose of resale is called as purchases. Now, business means what? Buying and selling of goods and services. If business has to sell the goods means first it has to purchase from the manufacturer. Now, it's known as purchases. And the next one, which is very difficult one, that is sales. Definition is simple, but when it's come to practical, no, it's horrible. Leave that. Sales means goods sold by the business and income earned from that activity is considered as sales. Next one is goods. That refers to the materials, commodities, or products in which a trader deals. Next one is stock. Normally, all the goods purchased or manufactured are not sold completely during an accounting period. Such as unsold goods in the business are called as stock. Let's move on to profit. Profit is the difference between the price and the cost of bringing to market whatever it is that is accounted as an enterprise. In other words, it is the excess of revenue or income over its related expenses for the accounting year is known as profit. Loss. It is the excess of expenses over the revenue for the particular accounting year is called as loss. Gain. An income which arises from the transaction which are unexpected and irregular to the business. Such incomes are called as gains. Let us move to the expenses and expenditure. There is a quite difference between these both. Expenses are the amount of money spent by a businessman for conducting the business activity or to earn some benefit. For example, salary, rent, advertisement, etc. Expenditure means spending money on maintaining the assets or on properties is called expenditure. It means the gross, let us talk about the revenue. It means the gross inflow of economic benefit arising from the ordinary operating activities of an enterprise such as sales, sales of goods, services, etc. In other words, these are the amounts of the business earned by selling its products or providing services to the customers are called revenue. Let's move on to the discount. Fine. You all are familiar with the discounts. In festivals, you see exclusive sales on an e-commerce platform with a huge discount on electronic gadgets, dress materials, etc. That's called as discount. Discount is a deduction in the price of goods sold or purchased. And the last one is voucher. These are the documentary evidence in support of any transactions which occur in the business. For example, invoice, cash memo, bills, etc.